While the S&P may be climbing on the month, with zero signs of letting up, there are gold find opportunities that remain out there, like this Magnificent 7 stock that just got wrecked as of days ago. And of course, when there's fear in the streets, it is just time to buy. Now that's exactly what I did earlier this week, so I'm going to go ahead and show you through the 3 dividend stocks that I bought more shares of to start the week. With that, investors, are you ready? So now overall 2024 has been quite good to all of us investors. The S&P continues to climb, already up by over 8% year to date, but not all stocks are created equally, as you know. And thanks to some unexpected news for some of these stock opportunities, the buy alarms have been sounded. Well, at least for me, they've been sounded. Now, I'm going to go ahead and get started in order of least expensive purchase to the most expensive purchase, but don't let that purchasing price fool you. All of these stocks, in my opinion, are bound to deliver some real financial firepower, with the first stock being everyone's favorite monthly paying dividend stock, Realty Income, ticker symbol O, which is a real estate investment trust that has rightfully earned its moat-worthy reputation for having grown its portfolio to over 15,000 properties across all 50 states, and now growing well outside the United States as well. Now, the key here is actually to recognize not only the sheer power of their portfolio size, but the clientele that weathers all forms of economic storms. Think Walmart, Home Depot, to the smaller scale 7-Elevens and CVS pharmacies. Now, an investment into Realty Income requires your attention to macros based on the timeline of interest rate cuts, when the cost of borrowing will certainly come down. So note that Realty Income, as of this video, actually remains down on the year by over 7%, trading for just $52 per share. Zooming out here to the 3-year view, we can see it is a high flyer here, at least when interest rates were next to near zero. Zooming out once more to a decade's time, we can actually see an overall growth here of appreciation of 106%. As for analyst sentiment right now, they are bullish, forecasting almost 20% worth of upside, coming up to $63 per share. So I went ahead earlier this week to buy another share for $52.81, bringing my share count up to 113 shares in my portfolio, to which I'm just going to continue to actually collect on the dividends here and really enjoy Realty Income for what it's worth at a 5.84% dividend yield. That's been on a streak for the last 55 years, and moreover growing on average by 5% year over year over the last 20 years. Now, investors, before I cover the next 2 dividend stocks that I bought more shares of, I want to go ahead and ask you to take some massive action right now. Perhaps not by executing on trades just yet, but actually by joining me on this financial freedom journey simply by subscribing. And while you're at it, I want you to go ahead and tap on that thumbs up button to actually let me know that this is the content that you came here for and that you're getting value from. And I'll then keep making videos just like this for you. With that, let's get to this next stock, which actually may throw you for a loop as it's not a dividend stock. It's Google, or Alphabet proper, ticker symbol GOOGL, which you're actually using right now simply by watching this YouTube video. Now, as Google is the largest search engine in the world, owning the second largest search engine in the world, YouTube, while remaining one of the most prominent names in the entire tech world, this stock is, at least in my opinion, a must for those of us with time to spend in the market for the long haul. You see, beyond its flagship ventures, Alphabet's portfolio includes ventures deeply integrated with AI, which truly is the next big thing. Among these ventures are Waymo, pioneering autonomous vehicles. Then we have Wing, specializing in drone-based air freight. DeepMind, dedicated towards advancing AI research. And of course, then we have Bard, an innovative generative AI chatbot. Now, together, all of these add up to a solid exposure to AI. And given us dividend investors are always looking for moat-worthy investments, this one is undeniable. Alphabet is, of course, a Magnificent 7 player and has led the market's gains for the past several years with its $1.66 trillion market cap. Now, Alphabet reached the heights of solid performance mainly from just Google search, its largest revenue generator, bringing in about $86.3 billion concluding 2023. But thanks thanks to this little Gemini hiccup and some antitrust news, check out this free fall here at $138 to just $133 earlier this week. Now we have the chance to actually zoom out here and see 339% worth of upside that I don't see slowing down anytime soon. Analysts predicting over 23% worth of upside coming up to $164.57 per share, while the company has been purchasing shares back as well in the billions. So I went ahead to scoop up more shares. Matter of fact, 2 more shares totaling $264.74, bringing my total share count up to 74 shares. But if you'd prefer to simply stick with a dividend stock, hey, I know the feeling, and therefore I'm going to present you with Visa, ticker symbol V, a stock that for me is in focus and will be all year long. I want to grow this position to over 100 shares, given the nature of their business model as a transaction facilitator collecting on fees from merchants while totally avoiding the risk and mess of the lending business. Now, chances are if you open up your wallet, don't worry, I'm not going to take anything from you, you have Visa stamped in there somewhere. So don't just use Visa's technology, invest into it. After all, right now is certainly the time to buy, in my opinion, after the stock slipped up earlier this week, falling from $278 per share, which you may say is still pretty astronomically expensive, and I hear you, but zooming out, we see year to date it's up already by 7%. Check this out, over a decade's time, more than 433% worth of share price appreciation, along with plenty of bullishness from analysts forecasting continued growth, popping up to over $308 per share. Now that's about 10% plus worth of upside and more value derived from a solid share buyback program as well. So I went ahead to actually purchase another share worth of Visa myself at $278.83, bringing my share count up to 5 shares. But the real magic of getting invested into Visa for the long term is the growing dividend. As we stand right now, it's just got a heck of a dividend growth record here. Right now, the yield is only coming in at 0.74%, but after 15 years worth of a dividend streak, we're seeing 18% on average year-over-year growth for the last 10 years. Now, investors, those were the stocks that I went ahead to buy earlier this week. I want to know what you've been buying, so comment down below. Of course, if you want to catch more insights, find them right here. But before you actually click away, subscribe to actually join this financial freedom journey.